Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock, with news that bond yields continue to push higher. But first, the US retail activity is still expanding at a good clip, even though the year-on-year base was weakish. But those base effects are falling away now and the reported gains are lower. However, American households are not just taking on new debt like they used to. Consumer debt rose by just $19 billion in December, and that was much less than the downwardly revised $39 billion gain for the previous month. It was also below market expectations of a $22 billion rise. They ended the year with household debt levels up just 5.9% and barely holding CPI. From pre-pandemic, household debt is up just 2.9% at an annual rate. In 2019, it rose 4.5%. But even if they are falling away at the end of the year, at those growth rates over the whole year, the increase is still material. Household debt grew almost $1 trillion in 2021, when US GDP grew $2.5 trillion in the same period. US household debt is now under 65% of US economic activity, but that's down from 68% at the end of 2020 and over 65% at the end of 2019. In Canada, they reported a trade deficit in December, an unexpected outcome for them, and their first since May. Imports rose 3.7%, while exports fell 0.9%. Household spending in Japan unexpectedly fell in real terms in December from the prior year, after a November fall too, and missing market forecasts of a small rise. In China, we should note that their housing market remained sluggish during the Spring Festival this year, and new home sales were significantly lower than a year earlier, with smaller cities under great pressure. New home transactions slid by almost a half from a year earlier, and falling by 8% from the same period in 2019. No word on how prices are fared in this retrenchment. In Australia, the widely watched NAB Business Confidence Survey for January was out late yesterday, and that shows business conditions deteriorated in January. But businesses are looking past all that, and confidence rebounded in January, with firms optimistic that the Omicron stall would be short-lived, and consistent with this, forward orders remain steady. The US Treasury 10-year yield opens today at 1.96%, and up another 3 basis points from this time yesterday, and another 2-year high. And the price of gold starts today at $1,827 an ounce, and up another $9 from where we left it yesterday. However, oil prices are much lower again from this time yesterday, and a bit more than $2 lower to just under $88 a barrel in the US, while the international Brent price is now just over $90 a barrel. And the Kiwi dollar will open today marginally firmer at 66.4 US cents. Against the Australian dollar, we're unchanged at our lower level of 93.1 Australian cents. And against the euro, we're firmish at 58.1 euro cents. That means our trade weighted index starts today at just over 70.8. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.